NBC News Senior Business Correspondent Christine Romans joins me now, along with NBC News White House Correspondent Yamiche Alcindor. Thanks to both of you for starting us off today. Christine, let's talk about what we saw in the markets today. What do you make of it?
You know, it shows you that yesterday was what we call a relief rally. And boy, it was quite a rally yesterday. But that was just the sheer relief that the president wasn't going to put all of those reciprocal tariffs on so many other nations. And then today, kind of the fog lifts and look, there are still 10% tariffs. There are still tariffs on steel and aluminum. There are still tariffs on Canada and Mexico, and really big tariffs on China that could threaten some sort of a trade war. And when the news broke, stocks were low early, fell right off the bat this morning. But then when it was clarified from the White House that the tariff rate on China is 145%, it just kind of sunk in, I think, with investors that we're in the midst of a big tariff war. The president's still trying to remake the global economy, and they sold stocks hard today.
Well, given that, Christine, and a lot of red there as you're talking, I mean, what are the implications for the economic outlook, which is, I think, the big question looming over all of this?
I mean, there's still just so much uncertainty at the very base of it. You heard the president say there'll be a period of transition. Yesterday, you heard the president say people were getting yippy, and so he backed off. So it's unclear how the president is sort of looking at what's happening in the market and maybe moderating his trade war. But it is still a trade war. It is still a White House that wants to put tariffs on countries to raise revenue, to fight fentanyl, and to remake the global world economic order. And one of the interesting things about investors, quite frankly, is that they're looking at what the president wants to do, which he says would put America first, and they see that as actually not putting America first, as taking America out of the leadership role in the global economy. And that means, is it the good investment it has always been? That's sort of the conversation you're hearing, just had the top line conversation the past couple of days.
Well, it's just fascinating to hear that, Christine. Let's delve a little bit more deeply into that 145% tariff on Chinese goods. I mean, it's just a staggering figure. When do you anticipate consumers will start to actually feel that?
I mean, within weeks. I mean, quite frankly, and they might feel it in a lot of different ways. I mean, there are economists who say 145% tariff on China. Some of these goods are just not going to come here. There are going to be goods that are just not going to be ordered, or orders that are canceled. So you'll see things that, expensive. You might see companies that start not carrying certain things. It will be devastating for the Chinese economic machine, but I think consumers, it remains to be seen just how dramatically consumers will feel it, but they will feel it.
Wow, couple of weeks, just incredible. All right, Christine Romans, thank you so much for your insights. Yamiche, let me head over to you. At the White House, President Trump was holding a cabinet meeting when stocks really started to dip again. I know you've been talking to your sources since then. What is the reaction inside the White House? Is there concern that stocks didn't rally again today?
Well, really, you can sum up the way that the president and the White House are reacting to the stock market in one word: defiance. The president is continuing to say that he believes that this economic strategy, chaotic as it may be, is the right one forward for this nation. He is doubling down on the idea that he believes that the U.S. is in a better position long term, and that countries are really scrambling to try to make negotiations with the United States because of these tariffs. Of course, we saw, him reverse course when it comes to most of these tariffs, even though, of course, there's still that baseline 10% tariff. But that's because he heard from business leaders and investors who are still, as we think about the stock market and what happened today, still very worried about the fact that there isn't really consistency in this market. The president also started doing something interesting, which is he started saying that there's going to be, quote, transaction costs. That was different than what he was saying before. He started calling them short-term pain. But the point is that he's hinting to Americans, including many of them who voted for lowering the cost of living, that things could get worse, Kristen.
Wow. And of course, he was elected on a promise to lower prices. So that certainly is an extraordinary admission by the president. Yamiche, there's so much discussion about the fact that countries have been approaching the White House to try to negotiate deals. Yesterday, we heard it was 75 countries. Today, Kevin Hassett said, no, it's more like 15. What are your sources telling you there?
My sources are telling me numbers that are all over the place. They range from 70 to 50 to 20. I've gotten some details about different countries like Vietnam, Israel. Of course, we know the Prime Minister Benjamin Netanyahu was at the White House earlier this week. I've also heard Cambodia and Poland are calling. The president said that he's been negotiating with EU, with the European Union as a bloc, not going to individual European countries in that regard. He said that just today in this cabinet meeting. What is clear is that the president's saying that he's going to remain flexible because he took a number of questions, including questions that said, well, are you going to roll back the tariffs if you don't get enough deals? Are you going to reimpose the tariffs if you don't get enough deals? Are you going to do something different? Can you negotiate the 10% baseline that wasn't rolled back? The president said all of this is depending on the conversations that he has and that everything remains flexible. So that's the word right now, flexible, chaotic. That's the president talking.
Wow. All right. Yamiche Alcindor, thank you so much for your great reporting, as always. Really appreciate it. Let's turn now to CNBC Senior Economics reporter Steve Liesman, who has been guiding us through all of this confusion over the last week, if not longer. He is back with us. Steve, thank you so much. So let's talk about where the stock market is right now. We saw that rally yesterday. Christine talked about it. It dipped again today. Is that an indication that there has been some real loss here that may not be able to be recovered?
I think so. I think the big thing that's happened here is a rethink of just how much relief there was yesterday in the tariff announcement. And it actually was pretty apparent at the time it happened, but maybe the numbers had not been crunched for investors to see. And what happened, Kristen, was there was only a modest drop in total tariffs that were charged. So we are now essentially in a place where we had historically high tariff rates at 30%, and now they're just a little bit below historically high tariff rates. These are still, when you add the new tariff on China, 145%, the still existing tariffs on autos, as well as some on the non-USMCA compliant stuff from Canada and Mexico. Add in steel, add in aluminum, a whole bunch of other things. The actual tariff rate only dropped a little bit. So Wall Street didn't like the tariffs before. They hated them out of the Rose Garden, and they still don't like them very much.
And of course, there's this big question looming over. A lot of investors and CEOs are looking for clarity on the president's strategy, on just how big and long this trade war with China is going to last. How does the lack of clarity impact the markets right now, Steve?
Yeah, let me break that up into two different things. The first is that I really think the president would have benefited yesterday if he could have come forward and shown the market what a single deal looks like. Because then you can kind of say, here's something that would be optimal, and you can begin to price that in. For example, what I didn't mention in my last list of things was the 10% across-the-board tariff. Is that a negotiable item? The president suggested it might be. So what people would like to do from an economics point of view and then from an investor point of view is price it in. Just tell me what the price is going to be. I can put it into my model and I can come up with a number, and I can bet for or against that number. I can take the over-under. You can't do that now. In fact, it's interesting that this 90-day period actually adds to uncertainty. There's that. And then there's the whole China thing, which on the one hand, 145% tariff is unsustainable. Once you get above a certain level, I don't know if it's triple digits or in the high double digits, it's like closing the door to trade. China is one of our biggest trading partners. It may be the most unfair relationship, but right now we are in this relationship. It's like being divorced but living in the same house, which is something I've heard people do. In any event, they're in the same house. They have no choice but to trade with each other. 145% tariff says those goods cannot come, and there is no obvious other place to get them from.
Well, you know, Kevin Hassett says that they are negotiating with 15 to 20 countries. How significant would that be if they can get a trade deal?
I mean, I have to swallow and kind of roll my eyes on that. There used to be a thing called the World Trade Organization where you negotiated with everybody at the same time. We all set the same rates. This looks to be the most inefficient way to do anything. And then all of a sudden, you're going to have to follow each trade negotiation. Looks like Vietnam is on tap, and then we go to another one, then we go to another one. And again, I guess it would be very helpful if they could basically take China, Mexico, and Canada and set those aside and come up with deals there, that would handle about, I don't know, 40 or 50% of all the trade, and the rest could maybe take care of itself. But if you're going to go like Vietnam and then do Lesotho and then do the Penguin Islands, I'm not sure that that's going to be something the market's going to have any ease pricing in.
And just big picture, obviously the big question looming over all of this is, could the economy dip into a recession? Steve, does what happened yesterday in any way mitigate the threat of a recession?
Well, it does mitigate it, but that's really the important story here, Kristen, which is that while recession probabilities declined, they didn't go away. For example, the economist at MetLife, actually a guy I've known for many decades now, a very conservative guy, he lowered his recession probability from 70% to 60%. I called J.P. Morgan, their chief economist, and he said his recession probability is still the same as it was, which is that there will be a recession. He said risks are down, and then Goldman Sachs went from 65% to a still elevated 45%. Bottom line, these high tariffs will still reduce growth and increase inflation. Both of those things will happen, and it will limit the ability of the Federal Reserve to come in and help the economy. Normally, if we were facing growth and an elevated recession risk, the Fed could come in and reduce rates. It is frozen here because of the inflation threat.
All right, Steve Liesman, as always, thank you for joining us. I have a feeling we will continue to talk throughout the week. Really appreciate your perspective.
Thanks for watching. Stay updated about breaking news and top stories on the NBC News app or follow us on social media.